Hi again. So, thank you everyone for joining the call today. I think, in the interest of time, we'll just get started. This is the that call we are having in this series of the behavioral and data-driven insurance innovation in Africa. As you all know, the initiative between the Microinsurance Network and Busara. In the first webinar, we learned about the principles of behavioral science, basically laying a foundation on what behavioral science is and what are some of the principles. And then in the second webinar, we talked about the design thinking process and how you can leverage the Combi model as well as the Audas model by Busara to understand your consumer products that meet their everyday needs, and basically to address the barriers and the challenges that you're facing, leveraging behavioral science interventions. So we thought that for this particular webinar, this month, would take a break from the learning just to bring in industry experts to share the experience so that you're also able to relate what you're learning to how you can apply it in your businesses and how you can apply it as you move forward, even beyond the series. So we have three speakers today, one from all of them actually from kind of the technical service provider space, but working very closely with insurance companies to design and improve these products. Jackie, I think I've seen your hand up.
I don't know if you're sharing your screen, Karimi, but it's blank, at least from my end.
Maybe there's a problem.
Yeah.
Okay, can anyone else? Is it blank?
Now it's gone, but it was
now
blank.
I've stopped sharing.
Yeah.
So maybe that's why. Let me try it one more time in case it doesn't work. We'll just, is it still blank here? It's still blank.
Yeah, still blank.
Okay. I think that's fine. Ideally, basically what I had were just the profiles of the speakers, but there's no problem. I'll just read through their profiles and we'll invite them to share and to speak. So like I said, for this particular webinar, we will get to hear from industry experts and people that have been leveraging behavioral science in their line of work, and how then you can leverage the insights from today's call, whether it's in handling your capstone or also in thinking about how you can move forward beyond the cohort when it comes to intervening for the barriers and the challenges that you're facing. So to start us off is Rehab. She's not new to the cohort, but just briefly maybe read her profile so that you have at least an idea of what she does beyond the webinars that we host every other month. So Rehab is an engagement director at Busara, developing the risk management and insurance portfolio. And she has focused her work on leveraging thought leadership in digital financial service, financial behaviors to increase the uptake of digital financial solutions by women and farming communities. She has over 19 years of experience across a diverse range of roles, from the field to the executive level, spanning a range of areas such as agriculture insurance, life insurance, sales and teaching insurance at the College of Insurance in Nairobi. So Rehab will be speaking to us about an experiment they conducted targeting agriculture insurance and how you can better design and leverage the existing community to improve the uptake of agriculture insurance among the farming community. So welcome, Rehab. And we'll have a Q&A after. So if you have any questions for her, you will be able to ask them once she's done presenting. So welcome, Rehab.
Thank you, Karimi, and welcome everyone. Welcome back to this session. It's good to see people back after, I think, did we have a session last week? It just feels like it was where we met this group again. So I'm going to be presenting work that Busara and Eka Africa worked on. And at the time, I was actually at Eka Africa, not at Busara. So I'm going to be presenting, I guess, from both perspectives as the client who, why we were doing this work with Busara, but also from a technical perspective, what Busara did. And, I think for those who are familiar with Eka Africa, the organization develops agriculture insurance solutions. So at the time, what the challenge we were facing was how to get farmers to increase uptake of a free insurance product that was being packaged in their seed. So the background to this was if you imagine that most farmers will probably not have any prior insurance solution or insurance product that they may have purchased, then working with farmers means that you want to give them a first good impression of insurance. You want to make the process easy. You want to make the product to make sense. You want to ensure that the product gives them a good understanding of how insurance works, including, shortening the time frame with which, you can actually make a claim and so on. So what we thought about here, or the product we're looking at here, was really like an introductory product, introducing farmers to the idea of insurance. And so what we did was to provide a drought cover for the first 21 days of the maize growing cycle. And it was meant or packaged or framed as a replanting guarantee. And the idea was that I think you may have all seen the situation where it rains, farmers run, they plant, and then the rains go away. And if the dry spell is long enough, then farmers may have to replant because whatever the seeds that have sprouted will not make it if that timeline is actually more than 3 weeks dry spell. So that was the idea of this solution. So at the time, we negotiated with a seed company called Seedco to pack a card inside the back of seed. So it was a scratch card that was meant to be the introduction to insurance. So the idea was that farmers would then scratch the card, register when they are planting from their farm, and from there we would have picked all the details that are needed to effect or get the cover started. We would have the planting date, we would have your location, and we would know that you're a maize farmer, and we would also know how many bags you've planted or how many you would need to get back, because then what you would be claiming basically is the value of a bag of seed. So if you have 5 bags registered, then you would be getting the cash equivalent of 5 bags back. So that was, in a nutshell, the idea of the product, but we were facing challenges with uptake with this product, and it was puzzling for us when I was at Eka, because we were like, this is a free product. The seed company is actually paying for the insurance premium of their marketing budget, so farmers were not paying for insurance, and we knew for sure that farmers were finding the card inside the bags, because we were at the factory floor. We saw that they packed the cards, so we were wondering what was happening. So that was the reason we approached Busara. Actually, the partnership and the introduction to Busara was through FSD Kenya, the Financial Sector Deepening. So they brought on Busara as like a technical assistance type of consultant to help us figure this out. So then the first thing that we did with Busara was to map out what the target behavior was. And so the idea was that a farmer should purchase a bag of seed at the agrovet, and then find the card. So that's how they would identify the promotion for the RPG. RPG is a replanting guarantee, so the insurance product basically. And then the farmer, ideally, once they find the card, should recognize what it is or want to interact with it. So read the card, scratch the scratch panel, and enroll themselves. So this was the expectation. what we found now from Busara as a first step is that there were gaps in that process. And yes, farmers were buying the bag and the card was inside. But in some cases, actually, some bags had the card missing. In other cases, farmers would find the card and assume that this is just marketing promotion from the seed company. So it'd be like, I've already bought the bag, I already buy from that company. I don't need the marketing now. So they would throw away the card. In other cases, the issue was that the person opening the bag is not the farmer, is a farmhand who's been hired to plant. And so they were not the ideal target, or we did not want the farmhands registering themselves. We wanted farmers to be, the farmer who bought the bag of seed to be the one to enroll. So, there were 3 gaps already in that second step. If the farmer has properly identified the card, has read it, what we found as other gaps was happening is that sometimes farmers would think that it will cost them money to register. Actually, we had a partnership with Safaricom. Can you hear me?
Yes, you can go ahead.
Okay. So, so we had a partnership with Safaricom. So actually, it was a free SMS, or it was 0 rated. Basically, we were using USSD. The other instance would be farmers would enter the code incorrectly and get frustrated when they're not able to complete the registration. Others would, let's say they've bought 5 bags, they would only register 1, and they would then say, I am now registered, without understanding the nuance that we wanted all bags registered, because it's the only way we would know how many bags, what the compensation would be. And then we had other farmers call the number instead of, instead of actually trying to enter the code on the USSD. So those were some of the additional gaps. And then in the last phase, if a farmer has properly now registered, then the other issue that would happen is that the value of the promotion may not have been clear to the farmer. So the idea of it's only, the insurance was only covering the first 21 days, only the value of the bag of seed, and not the value of the harvest that they likely would lose. In some cases, we would hear feedback that, some of the geographical locations where farmers were farming, there was no opportunity to replant, because it's either you planted on time and had a good season, or you missed it altogether. And so getting the value of the bag of seed bag was not enough value for them. They felt like what they had lost actually is an entire harvest rather than just seed only. And then we had gaps where farmers were unclear. They would find the cards, sit with them at home, and think that they would register at the end when they're done with the whole planting, not understanding the sensitivity around the date, that the date they register is assumed to be the date they plant. So there was a huge misalignment there. Farmers didn't always know anyone else using the product. So they were wondering whether it's a gimmick, whether there was something like a con job happening, how come it was free, and so on. So pulling everything together, the hypothesis we came up with is that what we needed was to increase identification, to improve understanding, and to clarify the value of this product, to increase registration. So it's kind of like we had a 3-pronged problem. It's either people were not identifying the card or the insurance, or if they identified it, they did not understand it, or did not know all the actions they needed to complete, or did not think it was valuable enough. So what we needed to think about, or what Busara was helping us think about at this time, is what changes could we do, minor changes could we do in the design, either of the card or of the bag of seed, anything on top that would increase awareness about the insurance solution that would be most compatible with a user experience when they're purchasing the bag of seed. So from a technical perspective, what Busara identified were, the type of behavioral mechanisms that were potentially at play or that we could leverage in this case. And there were quite a number. So these are just examples of, I would say, like the top 6 that would apply. So you'd have to think about social norms, and this is just to what extent can we leverage the idea of other farmers, peers like you, or farmers like you are also aware and enrolling for this thing, that you're not an outlier, you're not the only one doing this. The idea of, what kind of incentives would be appropriate to get them to actually enroll, recognize the card and take the action that we needed to take. We were also thinking about, the salience of the insured risk, drought in this case, and how important was it for people to actually take action on it, but also what are the mechanisms, financial mechanisms, could motivate people to actually take action. So there's quite a variety that we looked at. These are just examples. And to test the interventions, what Busara implemented was an RCT. So this is a randomized controlled trial, and the idea of an RCT is to compare those who receive a certain treatment and those who don't get any treatment. So if you think about it, our control group in this case would be, just to go back a little bit, our control group in this case would be farmers who were already receiving the original card that we had. And then we wanted to test a couple of the interventions from the table or the slide before to see which of those would end up making a difference. But that had to be randomized because in the first place, the bags of seed were going to a number of locations in the country based on what seeds are viable in which location. So there's an element of targeting there, but we wanted to randomize that. We wanted to make sure that in the factory floor, the cards that you don't have one treatment all of them ending up in one location. So there was quite a dynamic process there. So there were product level interventions. We had to think about market level interventions. So at product level, we were thinking about what is the minimum change, or what are the kind of changes we could make on the card, because that was in control, in ECA Africa's control. We could make a variety of designs very easily in a cost efficient way. But if you think about it, making changes to the bag of seed is actually a lot harder and more expensive for the seed company, and not in control of ECA Africa or Busara. So when we had that conversation with the seed company, it was a much bigger ask, to ask them whether we could change the design of the seed bag itself. And there's also regulations to consider. So what we ended up doing was printing about 800,000 cards over 2 seasons, because we wanted to see the difference from one season to the next. Also because of how the rainfall patterns look like in Kenya, the main season in one location is different from another location. So we wanted to be able to capture all these dynamics. So these are the kind of changes we ended up making. So the card on my right, like on the right on the screen at the bottom, the one that says no rain, no problem, is just white and like a green arc at the bottom with the Seedcore logo. That was the original design. That was my design. Actually, I remember doing this on a Word document, which I think right now with all Canva and all the other solutions available would be unthinkable. But that's what we had as the original card, and that would be our control group. And then the others you see are the changes that Busara came up with. These were the treatment or the intervention treatments, basically, that we wanted to test out. So you can see how we varied the images on the card, what type of, how we changed the font, for example, what words we were making to jump out. In one of the cases, we were using cartoons to just simplify the process so that someone doesn't actually have to read if they only had a second. And, can we pass the message in a quick and easy way? So after feedback with ECA Africa, we narrowed down, or Busara narrowed down to 4 classifications or 4 groups of interventions. So there were social norms, which are the top 4 cards you see were all around social norms. So the norming here was around, using factual information like X number of farmers are also insured in your area, or providing pictures that were kind of like aspirational. So if you're trying to look like a young, comfortable or well-to-do farmer, or a young female farmer, those are that was the norming, basically, like using those kind of images as visual cues. And then the bottom ones were around simplicity and the framing of the solution. And then there was also tapping into financial incentives, or the idea of a lottery to and I mean, if you think about what type of SMS no one will fail to pay attention to, it will be the M-Pesa message, for example. So a picture with money or coins of money would attract attention. So we wanted to see, would it indeed actually have an impact in how many people end up registering for this solution. So with all those different cards, we now needed to make sure that they are shuffled and properly randomized in terms of how they ended up in the bags that go to specific locations in the country, depending on the variety of seeds that are distributed. And so we had 4 treatments and the control. And so the findings overall, because we had 2 seasons, we had the March rainfall season and the November season. What we see in terms of registrations is already there was an uptick in terms of registrations. So the first graph, the one on the left, is showing how the registrations grew. And then we also had quite a number of invalid registration. So the deep blue is the November season, or the second season. So already this shows you, like, from one season to the next, there was already an increase, like a consistent increase in registrations, both in proper registrations, but also in the invalid registration. So invalid registrations would have been entering the wrong code, or entering the same code several times, trying to register it, or attempts to register it many times, which was, in some cases we would follow up with using the call center to find out what had happened there, whether what kind of challenges they were facing. So you notice that the middle bar talks about registrations without Meru North. I think there was something about an outlier about Meru North that I don't remember now. But ideally, I mean, there was a consistent growth from one season to the next, which meant something was working, but we needed to know then what had worked. So in the end, the two treatments that had the biggest effect were the simplicity. So the one using like a comic strip or a cartoon, just to simplify the message so that people didn't have to read to understand what to do. It had the scratch panel well placed at the top so that it's easy to just, it's intuitive. You just scratch and enter the details. And the idea of using the image of a phone was to, get them to know like exactly what they are supposed to do without having to read that, and to show them that it was just a 3-step process that was needed. And then the second successful one was the social norms, where we were talking about how many other farmers in their area, the idea of identity, the idea that farmers like you are registering for a service like this, which makes people feel like, they're not alone in this, that it's the norm, that I should be doing this because others are doing it. And so as Eka Africa, we then ended up picking the first one, the implementing the simple cartoon 3-step thing. So that's the card design we went with finally. There were changes that were made on the back of that of the card, just to again provide consistent and clear information about who is the insurer, so that people could see, okay, they're not assuming that this insurance is coming from the seed company, but they could see all the partners involved. There was a number to call in for assistance, and that was being made to be clear, but also just decluttering the text at the back to make it easy for anyone who wanted to get a bit more detail about it. So the front page was easy and intuitive, but the back provided a little more information if someone had any questions. So yeah, so the key takeaways here were that socialized content and simplified processes were appeared to remove the initial barriers in the registration process. And the idea of relating the card to something they're already familiar with, with the airtime scratch card. So it's an action to scratch the panel and enter the code in a USSD number was already a familiar action. And number 3 is that the idea of many other farmers who are participating, or the framing, can actually also be really powerful, even though we didn't end up going with that. We just picked the simple one, but we found that was an important takeaway as well. And interestingly, we had also tested both English and Swahili versions. So among the treatments, there were English and Swahili versions, because we also wanted to know, is it that they were having challenges reading because of the language used, reading and understanding the card. We found, interestingly, that for most of Kenya, their preference was to read English, apart from one location where Swahili seemed to be more popular, but majority preferred reading in English. So then even locations where farmers would rather have a training in vernacular or in Swahili, but they specifically wanted to read English, that was more intuitive for them. And then on the last point, yeah, we see that there was a recurrent registration from one season to the other. So that's it, basically. So basically, this gives you an example of how to identify the challenge, how to test an intervention. And an RCT, I would say, I mean, we like to say it's a gold standard for this kind of, testing interventions. But other type of interventions will not require this kind of robust and elaborate testing. You notice in this case, we tested it in 2 seasons because we wanted to be sure that the behavior sticks, that we are able to, it's not a one-time thing. Yeah. Thank you. I think I'll stop there, but that's what we did in 2015, Busara and Eka Africa.
Thank you. Thank you so much, Rehab. I think that was a very interesting and elaborate presentation in terms of how you can just leverage easy process and social norms to ensure that, people, farmers rather have a better understanding of the impact of having an insurance cover for their crops. We'll take one or two questions from the audience, and then we'll have the next presentation. So in case you have an audience, in case you have a question rather, please feel free to just raise your hand, and then I will unmute you and you can ask your question. Otherwise, I do have a question for you, Rahab, and Matthew, you here. Yes, you can go ahead and ask your question. And then I think Libe also has a question. We'll take those two questions and then we'll invite the next speaker.
Thanks, Karimi. Thanks, Rehab, for the really nice presentation. Nice to see you again. My question was just actually on your last point, because I was thinking, not all insurance companies have the resources to do these kind of different testing and so forth. So how would an insurance company do it in a more kind of resource strained way in terms of testing this kind of stuff?
Yeah. There are other options. This one was very rigorous, but I would say even focus group discussions and qualitative research actually can be quite powerful. I can see a situation where we could have done, if we didn't have time and money, we could have done A/B testing, where in focus group discussions, we would have presented different versions of the cards and had a conversation to see which one do they choose and why do they choose. If we actually, another option could have been to just come with the bags of seeds, put them in front of them and see what they do, observe them. So another example related to observation could be mystery shopping. So we could have gone to a couple of farms or agro dealers and see what happens. So, when people buy the bag, is there any information that is provided at the shop about the product? Because actually we did have an expectation that would happen. And what happens at the shop, at the farm once they're ready to plant, how many days was it taking a farmer to buy a bag versus when they actually plant? Are we picking an accurate date? Are we picking the accurate locations? So there is a little more we could have done qualitatively, which would have been relatively much cheaper. It would not have told us exactly what will work, but it's one of the ways you can kind of like eliminate interventions that would not work. So then you reduce to maybe like your top 2 or 3 that then you can test further.
Thanks.
Thank you. Any other questions? So Libe, I want to read your profile first because you're the next speaker, and then you can ask your question and then just go straight ahead to your presentation. So our next speaker is Libe. She is a research associate at Century, where she leads research across projects focused on inclusive finance, digital innovation, and financial integrity. She joined Century in 2021 and has contributed and led initiatives aimed at advancing financial inclusion for MSMEs, women, and low-income households across Africa. Her expertise spans regulatory innovation, resilience, remittance, ecosystems, fintech enablement, and more recently, sustainability. She's also a key contributor to the Africa FinTech platform, an initiative supporting the African Development Bank in building capacity for FinTech associations across the continent through a gender-inclusive and demand response digital platform. Now, in the context of this call, her work also includes scaling microinsurance in Kenya with Britam and SCBF, strengthening MSME insurance distribution with the IFC, and recently contributing to research on municipal disaster risk finance approaches in South Africa. Outside of work, she enjoys exploring Cape Town, embroidery, baking time with loved ones, and a well-brewed cup of coffee. So the next time we have a meeting in person, Libya will organize for some coffee. But for this particular call, You're welcome to just share with us key learnings from the project you implemented with Pritam. So you can go ahead, ask your question, and then start your presentation.
Thank you so much. I appreciate that, Karimi. And it's really lovely to join you all here today. Reb, thank you very much for that very insightful presentation. I remember working on a similar project a few years ago in the Rwanda context, and I really definitely saw a lot of similarities there. My question touches on a lot of what you and Matthew have already discussed, but to what extent do you feel that the challenges that were faced by farmers could actually have been bridged, for example, by more in-person? You mentioned the opportunity of, for example, going to the farmers themselves, helping them to work with or to use the cards. Would a cooperative representative or a community representative who had the knowledge of how to sign up, or even just having a contact person listed on the card, would you think that would have also enhanced uptake? I'm thinking also specifically in the case of trust and literacy around insurance and the benefits thereof. Someone who could have kind of bridged that gap for farmers that might not have understood what they were signing up for.
Actually, this is something we didn't think about, but mainly because we were not, they were not actually buying insurance. They were consuming a free service from a seed company that was guaranteeing that in the event of certain weather conditions, they would get the value of their seed back. So we were not looking at it as such that, literacy around insurance was required. But more like understanding the value of why, does drought happen? If it happens, in what conditions would you get the value of seed back? But for many insurance products, what you're suggesting actually would be a key component of any product succeeding. You would have to probably even intervene at the agent level, because you'd have to be thinking about how do you get the agents themselves to understand the solution, what are the methods they're going to use to actually talk about insurance with farmers, because I find financial literacy is still quite I would say a complex topic. How do you get people interested enough to understand about insurance? From our experience, we found gamification to be a powerful thing to use. Classrooms set up not so effective. And there's layers around, even who the messenger is, men versus women, trusted people, and so on, but also what the message is. So I agree with you that would have been another thing to consider, especially for if we required farmers to actually pay for insurance, and if we were to move from a free product to a paid product, that would have been a necessary thing to consider.
Yeah, great points. Thank you so much. Great, then I think I will share screen quickly. Just give me one moment. Apologies, that's the wrong screen. All right, if I can just get an indication that everyone can currently see my screen, then I'm happy to kick off.
Yes, you can go ahead.
Great, thank you very much. Great, so thank you so much to all who are attending. As I mentioned, my name is Libe, and I'm a research associate with Senfree. I've had the privilege of working on two projects in Kenya recently, specifically related to health insurance and micro health insurance more specifically. And I'd like to share some of the behavioral lessons that we learned from this consumer research that we've done over the last 4 years. I'll put it plainly that I'm definitely not seeing myself as a behavioral science expert. I think we have a lot of experts in the room, but I definitely do have a few insights that we gleaned that both speak to behavioral science and that speak to things that may have behavioral science aspects in them, even if not per se the the principles that drive it. So essentially what I'll be speaking to today is two recent projects that we did in Kenya. Even though they have differing approaches, they definitely have quite a few links. And so the first initiative that I'll be talking to was conducted around 2021 in partnership with Britam, MTIBA, FST Africa, and the UK Aid. And essentially that focused on nimble behavioral evaluations, with the end aim of increasing the number of customers who express interest in this low-cost health microinsurance product. For those who may not be aware with the term, nimble evaluations is essentially just a means of testing multiple hypotheses for behavior change over time, to then move people towards the most effective behavioral intervention. And really all this means is to kind of change behavior so that people, for example, in this case, would have expressed interest in the low-cost health microinsurance product. The second initiative was conducted between 2021 and 2024, and that was in partnership with the SCBF, as Karimi mentioned earlier. And really that aimed to then scale this health microinsurance product delivery in Kenya. We used the Britam's Bima ya Mwananchi product, which, for those who may be aware, focuses on low-income and informal sector populations. In doing this partnership, we also worked with CarePay and its MTIBA digital wallet, which allows users to save for various purposes. And we essentially then used that customer data to then refine the product, really enhance the customer experience, and overall expand insurance access. So the rest of my presentation is structured along 3 core lessons that we learned over the course of both projects, which actually yielded quite similar findings. So the first is, of course, that data is really essential for understanding your customers. And we all know that insurers sit on so much data, but they often don't know what to do with it or don't use it effectively enough. And basically through this project, we learned that that is really crucial to be able to understand customers and their behavior. And then in turn, also that uncovering of customer behavior will also inform better product design. So it kind of has that twofold benefit. The second lesson that I'll share is around the customer journey that needs to be continuously adapted based on customer feedback. And the third lesson refers to the kind of marketing and outreach efforts that you use, and the fact that that should be guided by your insights from your data, as well as incorporating several behavioral science principles. So as I mentioned, the first lesson is really the kind of foundation of being able to serve your customers properly. And that really is understanding who you are serving. So for this purpose, when we worked with on the second Britam project, we set out to segment their data in order to understand their customer base better. So as a reminder, what we were trying to do here is scale the health microinsurance product, which meant that we also needed to know who we were going to target. So for this, Britam gained access to the anonymized data from CarePay's health wallet platform for a subset of their users. At the time, there were 4 million users actively using the CarePay platform, and we then used a starting sample of about 250,000, of which 90,000 had to be excluded because they already held some form of insurance. So really the segmentation that you're seeing on the screen right now was informed by around 159,000 roughly users that were considered the addressable market. Then we focused on specific segmentation variables, such as savings behavior, demographics, age, gender, etc., their healthcare spending and treatment history, and then also whether they had dependents. And from here, 5 typologies or segments emerged. So the first one would be your non-users. So that's definitely the biggest portion of the sample. And they had signed up for the wallet platform, but they did not save into it. The second one is around individual savers. And the third is on family savers. So really, those two are quite similar. The only difference is that individual savers do not have any dependents. The fourth segment that emerged was the high needs segment, and you can see they're definitely the smallest part. They are those that have higher than average health expenditures. And the fifth would be the new members that we don't really have a lot of data on because they only joined the platform in the last 11 months. So from here, essentially two key findings emerged when looking at these segments a little bit more closely. The first one is that the segments with the highest potential is definitely the individual savers and the family savers, because they already had that positive savings behavior in the wallet, which could then be used to target them for additional products like insurance. And then the second part was that the high needs segment is quite small, and they are also high risk. So even though they are attractive because their insurance demand is high, they do have that additional challenge and risk from a risk pooling perspective, and then also from a pricing perspective. So essentially what we were suggesting is that they would target those family savers and individual savers. And the implications for Britam in this case is that they really should choose their customer segments carefully, and this holds for all insurers, of course, and also tailor the product and distribution accordingly. And then in combination with that, and this is exactly what Rayab also mentioned in the previous presentation, is that although the mobile and digital channels are useful, when used alone, it doesn't really overcome that trust issue and also the behavioral barriers. So that hybrid model with both the digital and the human touch came across quite strongly, and it's definitely something that I'll reiterate throughout this presentation. So the second lesson that we learned refers to the need to improve the product and customer journey. And what we found is that customers really respond well if their experience is very simple and seamless. And this really also boils down to quite a few behavioral science, I would say, informed principles. The first of course, being that there is really an aversion to choice and complexity. So people generally avoid options that appear too complex, even when it is beneficial for them. And the solution for this is really to try and simplify as far as possible when you can. Even in this case, what we suggested was a very simple form of self-onboarding, which has a lot more information for the customer to engage with in a simplified way, so that they can make a decision at their own pace to take up the product or not, and that they also don't feel pressured to do so, for example, if the sales method is telephonically, for example. Another issue is on the cognitive load theory or limited attention span. And what we found is that excess information really impedes decision making. So even though I mentioned additional information in the previous slide, the context and the focus should always be on simplifying it as far as possible. Wherever you have additional steps in the claims process or in the sign-up process, for example, we found that it also lowers the completion rate, and simple, repeatable flows actually fosters habits that you want to see over time. So in this example, we suggested using biometrics to make sign up and claiming easier, or when accessing healthcare, or to have automated processes, for example, when claiming, also makes the process a lot more seamless and simple. And then finally, customer education is another big part of this, and I'll also touch on it a little bit later. The third point is around trust and social presence. And here we know that trust is really strengthened by human cues, especially when it comes to insurance, which, as we know, is often quite misunderstood in terms of its benefits and also the realities around it. And what we found here is that visible, frequent, and local benefits actually makes abstract protection feel real. And customers also crave that tangible reassurance. So even though you offer the digital onboarding methods, having someone face-to-face, for example, a community member or a representative that goes into the communities or workplaces face-to-face really helps consumers feel that they can have their questions answered and their fears alleviated in a face-to-face manner. And then the last point is around procedural justice or reciprocity. And what we see here is that satisfaction really depends on fairness and transparency in outcomes and processes. And this really shapes customer satisfaction and their intent to renew their policy, which is, of course, ultimately the end goal as well. So in the case of the BRITAM and SCBF project, BRITAM actually expanded their healthcare facilities as well as their outpatient cover options. So this ties in both with the tangible reassurance so that people can see the visible benefit of taking up insurance, but this also makes people feel that what they pay for, they actually do get the value for. And that's another example of them doing it in response to customer feedback. The last part relates to marketing and outreach, and also kind of sets the scene for the explanation of the behavioral interventions that we used. But I just want to point out two key things that stood out from these projects for us, specifically around how trust and timing actually helps to make messages work. So the first thing that stood out to me was that insurance is often not top of mind for consumers until it is essentially too late for them. So in the sense that until a health crisis occurs, many people don't have the luxury of planning for future healthcare related expenses, etc. And this is, of course, particularly alarming because we know that from 2023 data, close to 40% of Kenyans already lived below the national poverty line. And although this is a little bit older data, in 2018, catastrophic health-related expenses drove 1.1 million people in Kenya deeper into poverty. So, of course, this is definitely something that needs to be addressed. And our suggestion here was that you need to design well-targeted advertisements. And whenever you engage with a consumer, that you're able to tell them exactly what they're signing up for. So, yes, emphasizing the benefits, but also emphasizing it as a tool to plan for your future and to plan in the case that something goes wrong in the future. And the other point to emphasize here is that simpler, more story-based messaging really helps to build that emotional connection. And here, for example, influencer marketing worked really well for BRITAM. The only thing to note here is that, of course, when using an influencer, ensuring that it's a vetted person, that they convey your messages accurately and clearly, and that they're not misleading the customer is, of course, one of the key priorities on that front. So that was essentially, in a nutshell, the lessons that we learned from the BRITAM and SCBF project from 2021 to 2024. And I also just wanted to stand still on the nimble behavioral evaluation that we concluded in 2021, because a lot of the messages actually tie in with each other quite nicely. And for this nimble behavioral evaluation, I won't go into too much depth. I'll share the links afterwards for further reading. But essentially what we tried to test here by using even just something as simple as SMSs is really to determine whether, for example, customers are extremely price sensitive, and whether it may mean that you need to lead with the consumer education before you lead with the price of the product. The second part was around whether seasonality impacts when customers would be interested in signing up for insurance, whether plain language and simplifying, for example, insurance jargon would mean that customers may understand what insurance is for a little bit better. And also then salience, which refers to that eliciting of emotional responses. And what we found here, or that what we wanted to test here, was whether it is in fact true that individuals actually relate quite strongly to information that affects them or that they can relate to. And we tested this through a series of experiments, each underpinned in a specific research question, whereafter we used SMSs as treatments. So overall, what we wanted to do is, of course, understand customer behavior and how that would change based on small changes in the SMSs that were being sent to these customers as marketing materials. So in terms of experiment one, that one focused on price. So whether price was really the driving factor in exploring insurance cover. And you can see that the SMS one, the SMS that included the price had the slightly higher response rates. Experiment 2 focused on whether the SMS copy or the time of the year that the SMS was sent was the most important in driving uptake. And experiment 3 focused on whether customers understand the meaning of inpatient benefits. So that's, for example, testing that insurance jargon language. And then experiment 4 focused on which benefits are most salient for customers. And this one is the only one, as you would see, that had an additional SMS over and above the others. The second one targeted women only because it was maternity cover. And the third one targeted both men and women, but for funeral cover, for example. So what we found overall is that price sensitivity definitely plays a very, very big role in terms of how interested people are in the product. So, for example, those with higher savings rates were already correlated with showing a greater likelihood of showing interest in the product. And those with lower savings were more likely to respond when the SMS excluded the price. So that also means that there is a financial literacy component included there. Seasonality definitely played a big role. We found that response rates were definitely lower in December and early January, which suggests that timing influences the willingness to explore insurance. And the last point is around the gender differences. And we found that the funeral benefit message actually resonates a lot more with men, which may link to traditional household roles or that traditional provider role that men may take on. And then women, interestingly enough, preferred the original SMS and not necessarily the one targeted specifically towards maternity. So essentially, all of this led to the following recommendations that we made across the 2 projects. And this is the last slide, and then I'll conclude. But essentially, what we found as a kind of baseline finding across the board is that institutions and insurance really need to leverage their customer data to be able to design well-targeted products. So, for example, in the case of the behavioral intervention, we know that price references should be avoided when engaging with low savers until they have a better understanding of what insurance actually means. The timing of campaigns should be done in such a way that you will be able to reach the most customers, that they won't, for example, be on holiday. And then communication should definitely also be tailored to gender and household roles, and also specifically to cultural context. We found there were a lot of opportunities where, for example, in the sale of a product, if there is a cultural understanding around, for example, funeral cover, that needs to be taken into account when selling that product, which also contains funeral cover, so as to ensure that you're taking that cultural context into account when speaking to the customer and framing it in a way that they will receive it in the best way. The last few points relates to building trust, which is by far one of the biggest lessons that we learned throughout these projects. First off, the need for incorporating human touch, and then also the need for incorporating simple processes and really clear customer education, which will enhance the perceived value of insurance for these customers. And the last point, despite the need for human touch, definitely also leveraging technology where possible to make the process more seamless and to enhance the customer experience also really serves the organization really well, and can also encourage customer retention over time. So that is in a nutshell on both of these projects. I will also be sharing these links afterwards because I definitely only shared some cliff notes for this session. But yeah, if you have any other questions, please feel free to ask now, or you're also welcome to check out our website afterwards, which also has a lot of these knowledge products published. Thank you so much.
Thank you so much, Lipe. That was such a great presentation as well, and quite a number of similarities also between what Rehab and Hadia shared in terms of really the need for simplified processes. I think you also bring in the aspect of data segmentation and understanding different profiles that exist within the customer base of the insurance industry. Maybe a follow-up question to that, even as I open up the Q&A to the audience, is in your capacity, you work with different institutions in the financial inclusion landscape. And a lot of the times data is perceived to be a challenge in terms of the lack of it, or maybe there is data, but in terms of how institutions are able to leverage that data, then there's also a mismatch. Perhaps what would be your sentiments in terms of what or how much more institutions can leverage the data that they have, or based on the the trends that you've seen within the industry, what are some of the things that the maybe institutions that are looking to serve the vulnerable population can leverage to better design their products? Or what do you think is underrated in the market that can help with this?
Yeah, thanks, Karimi. I think that's a great question, and it relates a lot to, we wrote 2 blogs as part of the Britam and SCBF project that we concluded last year. And the 2 blogs names were does client data trump client volume? And the second one was are Kenyans value maximizers or cost minimizers? And both had the same underlying topic, which is data is a non-negotiable in this industry. It is very often used for risk metrics or to enhance scale, etc. But it's very seldomly used to understand the customer, to understand the segments or proportions of the customers that you're serving, and then to also tailor the product design accordingly. And what we found is, for example, in the case of a partnership, when you partner with an organization such as the Britam and CarePay partnership, CarePay had 4 million customers on their digital platform, and yet only 159,000 of those would be an addressable market for Britam. You wouldn't have known that unless you had gone through the segmentation exercise, and that's quite a far jump in terms of your potential target market. And then the other part is on the second blog that we wrote was around the value maximization versus cost minimization. And especially if you're working in the microinsurance industry, you would know the prevailing theme is always kind of that race to the bottom when it comes to costs. You have to keep costs as low as possible to encourage uptake and to ensure that as many people as possible are included. And while that is true, the context there is very important, because what we found through this study was that Kenyans actually often went for the highest value options, even though they were more expensive, because they started understanding the perceived benefits of, for example, having outpatient cover or a higher option for a hospital plan. And I think that really speaks to the need for also understanding your customer base and not just going with the flow in terms of what the trends usually indicate, but really deciding for yourself and determining for yourself what your customer base actually needs. So I would say using the data that you already have is already such an easy low-hanging fruit to use. And another thing also is we noticed that a lot of insurers actually have data on their customers over a long period of time, but many of them, when a customer renews their policy, it actually goes back to zero and they're seen as a new customer. And that is a very simple thing to fix to ensure that there is more long-term retaining of customer transaction history, and that you're able to then use that to reward loyalty of customers, and then also cross-sell products in the future. So I would say that's kind of the biggest thing that I would suggest. I don't know if Karimi is still on the call. I think we may have lost her there.
Yeah, I think we lost Karimi. Thank you. Maybe we can move to just a moment. Let me pull up. Yeah, we can move to our last presentation, and then maybe if the audience has any questions, please put your questions in the chat or keep them for later. Then you can ask at the end, Daniel, because I think, yeah, we are also running out of time. But yeah, so Shadrach is the head of pricing and portfolio management at CarePay, which is a leading health technology company that enables digital healthcare payments and financing. In his role, he leads CarePay's provider partnerships and analytics functions with a focus on leveraging data and AI to improve healthcare access, affordability, and efficiency. With extensive experience in health insurance and digital innovation, Shadrach has played a key role in using data-driven insights to strengthen provider and patient engagement, optimize product design, and enhance financial sustainability in health systems. He's passionate about applying technology and evidence-based approaches to expand health coverage in emerging markets. So I think Shadrach's presentation will also link well with what Karimi was asking about data. Welcome, Shadrach. Over to you, please.
Yes, thank you. You can hear me?
Yes, perfect.
Okay, super. Thanks a lot. It's indeed a pleasure to be here. Following the introduction the presentation from Liba, it's actually also a great coincidence that she was also presenting on some of the work that we do at CarePay. Of course, some of this was also prior to when I joined, so I was also listening as well and learning as you were speaking, Liba. But yeah, thanks for having me. So perhaps maybe I can start with a brief introduction on who MTBA is, and before we start, and then dive into some of the things that we are seeing. I will also caveat my presentation by saying that I am by no means a sort of expert in behavioral science, but at the same time, I think there's lots of similarities between the work that we're doing and some of the insights we're seeing, and also some of the points that Dainora Hub has shared in the call today and in the calls that she did prior to this. And then in addition, some of what we'll be sharing is also fresh and new. So it's things that are evolving as we go based on new insights. So at the same time, also welcome any questions and feedback, also because we're also in a learning journey ourselves as we continue to sort of try and see how we can have an impact in this space. But first off, let me start with the introduction on who MTBA is. So as mentioned, MTBA is a next generation end-to-end platform. We focus on health insurers, and our goal is to make or to allow health insurers to make their offerings more personalized and data-driven. And why it matters to us is, we all know that insurance is very, very complex to anyone who's not in insurance. I think health insurance is even more complex. So what we hope to achieve is to make insurance more intuitive and accessible. We previously started off as a dedicated mobile savings wallet. And that's also touches on what Liba had mentioned, where people were basically saving towards their healthcare goals. But we also decided to try and see what impact we could have in the private insurance space as well, given some of the challenges that we were seeing. So our platform basically connects members, so the people who are insured, also connects hospitals and insurers all in one ecosystem, allowing them to exchange data in a much more efficient manner. And then in addition to just offering the software platform, we also provide administration services as well, where insurers also outsource some of their back office work to us, with a view that by doing more and more of that, we can build the tools that are needed to make that even more efficient, right? Thereby changing some of that manual work to more and more, making it more and more automated, basically. We are known under different brands in various geographies. In Kenya, we go by MTBA. We're also in the UAE, where we go by Aspire as well. Yeah, so just speaking a bit about who we work with. I know some of the people on this call we have worked with and we're working with as well. So yeah, I won't spend too much time on this. So in terms of some of the key challenges that we see in health insurance, some of this will not necessarily be new, but I thought it's important just to set this context for some of us who are coming from maybe the life or the property side of things. Basically, in health insurance, what we're seeing, globally is that healthcare costs are increasing, right? This is due to various factors. You have inflation, you have the fact that the disease burdens are changing towards more, less sort of infectious diseases that are a bit more easier to manage and more, things like cancers, diabetes, etc., which are more, chronic conditions. So costs are increasing, right? And at the same time, premiums also are increasing as well, right? So what this therefore means is that there's also we're basically pushing more and more people out of the health insurance space because they're unable to afford this, right? So what we see in the markets, in many of the markets that I'm sure all of you are familiar with, insurance penetration is quite low, right? So the way we approach it is, what can we do about the end-to-end journey to sort of address these two challenges? Because hopefully, if we're able to either make it easier for people to get in, or for if we're able to bring down the overall costs, either from a healthcare costs approach or by working on the operational costs, we're better able to reduce the ultimately reduce the price and the premiums that people are charged, and by this allow more people to actually access care. But our goal is, what can we do about the end-to-end journey, and what are the efficiencies we see there? So I'll share with us some case examples of what we are working on. Again, some of these are fresh, either at the pilot stage, some a bit more advanced. But I think as an industry, I think it's useful for us to exchange notes to see what's working and what are the learnings that we can exchange with each other. So I'll try and talk through 4 of this in my presentation. And then I see some questions coming up, but I think we can take this at the end. So first off, let's talk about onboarding. So here, in terms of the challenge, right? So currently, health insurance is sold through agents and brokers, right? So there's always an intermediary who has to explain what the product you're buying is, who also has to, either help you fill out a physical form. And what this therefore means is that there's some challenges here, right? The first challenge is that there has to be a form that is signed. It might not be easy for someone to understand. I also need to have an agent close to me. It therefore means that if I'm in an area where I don't have an agent, that presents some problems. There are also, of course, innovations that are being done around, making it such that someone can fill out a form and then that data is sent to an insurer, then the insurer then keys in the data into their own main system. But of course, we know that introduces more friction in the journey, right? So it's more difficult to port data. Data is lost in that process, et cetera, et cetera. So what we thought here is, where can we find these people? Right? And most of us, the numbers show that about 95% of people are on WhatsApp, right? So is there anything we can do about, instead of making people go through an agent, can we meet people where they are? So this is one of the things that we are currently working on in a pilot phase, and that basically allows someone to sign up and register for an insurance product on WhatsApp, and it immediately shows up in the main system, right? And I think that's a key point to show up here, to mention here. It's not that the data here is then, it fills out a certain Excel, and then someone has to now copy the data from Excel into the main system. This is data that goes straight from WhatsApp into the insurance core system. So I'll just give a short demo of what that looks like. Of course, it's not very clean and optimal from a user experience view. I'm sure Rahab will already see this, but as we said, we're also sharing this from the front line. So this is basically someone who's chatting with our WhatsApp bot. So they're asked for some of the key KYC information that one has to provide. What's your last name? What's your first name? Proceed. What's your date of birth? Yes, this is some engineering code that runs. And then in the background, what then happens here is that this person shows up on our system, right? So that's what's going to show up in a minute now.
Shadrach, I can see you talking to you.
Hello? Hi, can you hear
Yes,
me?
you're back.
Rahab, can you hear me?
Yeah,
Or is
we
it
can hear you
Jacqueline?
now. Yes.
Okay,
Yes, we can hear you
awesome.
now. Mm.
Okay, I am not sure where you lost me. Could you see the video that was playing in the background?
Yes, we saw the video.
Okay, perfect. Essentially, in summary, what just happened there is that someone was able to register for an insurance product on WhatsApp, and the insurer was able to actually see them on their main system in a matter of seconds, right? And what that therefore means is that we can now reach people wherever they are. You don't have to look for an agent. You don't have to look for a broker. You don't have to call a broker. If you want to sign up for insurance at 2 a.m. in the morning, you can do that, right? So that's journey, sort of one of the case studies that we're working on. Along the same lines, maybe let me actually skip to number 4, because I think it touches, they actually go quite well together. So here, the key problem we're trying to solve is, okay, so let's say I've now bought a product, right? Let's say I saw an ad on the papers, or however, I've now bought this product. At the same time, you still find that insurance products are very complex. As I mentioned earlier, you have lots of terms and conditions that half of the people don't really understand. So what we then try to solve is, okay, how can we make this easier to understand and more intuitive? So what we're then working on now is Cassie. So Cassie is basically our AI agent that is embedded in our mobile app that allows a member to basically ask questions to Cassie, and Cassie is basically able to answer. Right? So this is trying to improve the efficiency around queries from customers. Right now, what they have to do is either call their broker or reach out to the call center. So this allows them to do that a bit more efficiently. So let me play that so that you can see how this works. So this is a view from our mobile app, basically. So this is now your health insurance policy. At the top, you can see your benefits, and then at the bottom there's a talk to Cassie button. And here you can ask Cassie whatever questions you want. Hey, I'd like to check if my policy covers physiotherapy, for example. And hopefully she responds, yes. So Cassie is now looking at your policy and checking to see whether that's actually covered, and responds that yes, you're actually covered for 10 sessions. You might then ask, okay, how many have I used up? And she then responds saying, okay, you've used up 3 and you're left with about 4 of them. And then you also ask, okay, what's my, what's a copay, and how much is my balance? And that's what she's able to basically respond. So this here is basically, trying to leverage some of the more advanced ways of working. AI is all the rage at the moment around the world. So this is basically our response to this, right? So how can we use AI to support members to actually understand what they're buying and make insurance more intuitive, basically. So this is basically addressing the customer side of things. There's now the operational side of things as well, which I'll jump to. This is my example 2. So the examples that I just showed were around the customer side. How do you make onboarding easy? And once people have been onboarded, how do you ensure that they're actually able to understand what they bought? Now, the second part is around the operational side, right? So in health insurance and insurance overall, we know that fraud and waste are very big cost drivers, right? And the hypothesis here that insurers have is that if we're able to actually reduce this, it'll have a massive impact in terms of costs and also allow us to offer more affordable products. So here there's 2 parts to this. There's operational side and there's actually the medical cost side of things. So on the operational side of things, as we all know, whenever a claim is submitted, insurers want to get comfort that what they're paying for is actually a valid claim. So what you see at the top here, the first row is basically how things used to work, right? So of course, we're not starting from zero, right? We recognize that there were already several initiatives around automation that are already in place. So what used to happen for us before we now adopted the machine learning and AI is the provider, as I mentioned earlier, the provider also has an interface into a portal. So they used to, log into the interface and submit a claim. This then goes into a sort of a claims automation engine, which is very rules-based, right? That basically says, does this diagnosis match the treatment that's given? Does this person actually have a valid cover, and so on and so forth? And then if all those rules are checked, then the claim is okay and it's approved. If it's not okay, then a human sort of has to manually adjudicate the claim, right? And then, of course, they can then decide whether to approve or reject. Now, the challenges with this model, of course, are that with simple rules-based approaches, you can only get so far. Health insurance is quite complex, right? As you can imagine, there's probably thousands of different diagnoses. There's probably millions of different products. So we're using a very simple rules-based approach, trying to match, trying to come up with rules that will be able to assess, 1,000 plus diagnoses versus millions of different products. You can only get so far. Right? So given the advancements around AI that are happening, what we then decided to do is see what we could adopt to ensure that we can also sort of improve this process as well. So what we then decided to do is introduce machine learning into the picture, which is this purple block that you see here. I won't get into the details, but basically what this approach, basically how it looks is that now instead of having just one engine, you actually have two engines, one that is rules-based, which caters to a certain percentage of the claims, another one that uses more advanced ways of working, so machine learning models. But at the same time, we still have a human in the loop, right? So at the end of the day, whatever has passed through the claims automation engine and been rejected, and passed through the machine learning engine and been rejected, still needs to go through a human claim assessor to really verify that indeed the claim is not payable. And once they're done, they can then approve the claim, and if not, reject it, right? So what we are seeing from this is that this with machine learning, you're able to do a lot more. You're able to find patterns in the data that will be quite difficult to derive just by using simple rules-based approaches, right? And the impact that we're able to see from this is that, and these are initial figures, we're able to now get to about 40% of claims being automated, which therefore means that human doesn't need to review this claims manually and approve them, right? Now, this is not to say that we're done. We are currently even looking at ways in which we can retrain this model using more advanced methods to even see whether we can increase that 40% even higher. Now, from a behavioral view as well, some of the unintended consequences that one can imagine is that, with this approach, there's more and more claims that you can, in theory, prove in a second, right? So, you don't need a human to sit through and review a claim for 5, 10 minutes, 30 minutes, etc. And then also this claim can be approved in a matter of seconds, right? So, some of the questions that this is raising is if I am a provider and I knew that my claim is being approved in a matter of seconds, and given that we know that in the context in which we operate, there's a tension between insurers and providers as far as fraud is concerned. So there's also now questions around, okay, will this now trigger the providers to become more creative, because it's not it's not a human that's actually viewing this, it's a machine. So can they try and game the machine in a way? So that's some of the questions that we're having to actually grapple with. And this is actually quite key, because we want to make sure that by automating, we're not resulting in increased financial losses for our insurers, right? So that's something to also be, to have front and center, basically. Now, I talked about the human in the loop. So whatever the human in the loop reviews is also still comes with some degree of insight from the machine learning model. So this is an example of what that looked like. So what you're seeing here is the view of our MTibo platform from the point of view of a claim assessor. So a claim assessor is actually looking in and reviewing a claim. And this is what they're seeing from their side, right? So they're seeing, so this is a claim from Dandora Medical Center. It has 3 items, amoxicillin consultation, malaria antigen test. You can see the consultation is about 2,000 shillings, which for the Kenyans in the room, you might already note that that is actually quite expensive. And the other thing is that this person has a diagnosis for malaria, whereas we see amoxicillin as one of the items that has been offered. Amoxicillin is an antibiotic, so it should not be here, basically. And so we'll basically see what the platform is able to do, what the AI and automation models are able to do here. Okay. Okay, sorry, let me pause here. Yeah, so actually, so what you saw there is the claim from Dandora Medical Center that they're now submitting to the insurer for the insurer to then review. So what you're going to see is what I've spoken about earlier, which is now the insurer is now reviewing this claim to make sure it's okay. Let me hit play. So the first thing we notice here is that, so this is the claim that's being reviewed. You can already see that the model has already said, okay, there's a treatment here that doesn't match the diagnosis, then item that surpasses the market price. So even where the claim has to come to a claim assessor, a human, they still have some information that can assist them in terms of making the decision, right? So in this case, the human is able to see that, okay, I need to ask the provider for more information on these 2 products because they don't match the claim from a diagnosis point of view, but also from a price view as well. However, this antigen is okay, so maybe I can approve that, and the other 2 I need to then reject. So that's basically what the output will be in this case. Now, what we see from this in terms of impact is that this is able to, by using machine learning models and this human in the loop approach, you're able to increase the productivity of an assessor by about 5 times, right? Which therefore means that they're now able to focus on much more complex claims, especially things like inpatient, which are a lot more complex and need a lot more sort of brain capacity, right? Some of this more simpler stuff can then be handled by the AI and AI engine, basically. So last example, I don't know, Rahab or Karimi, if I still have time, was just going to show from an analytics point of view, right? So we've now discussed the journey in terms of onboarding, discussed operations in terms of the claim assessment view. What now happens with all this data that we have, right? So the example I'd like to show here is now what we're able to do from an analytics perspective to really create visibility in terms of what's actually going on and to be able to actually support our insurers to make, or rather to take decisions a lot faster, right? So what we've been able to build is a very comprehensive set of dashboards that allow our insurers to be able to have a very good and firm grasp on what is actually going on. So first off, we have a scheme dashboard, which takes data from our platform and synthesizes it into some of the key points, right? And what this allows insurers to do is now they have real-time insights into the financial and operational health of their schemes. And by monitoring some of the key KPIs in real time, they can now identify trends and anomalies that might indicate emerging risks. So for example, unexpected spike in claims. So this dashboard, for example, shows you on a daily basis how many claims did I have, and it's updated in real time, right? So what one can then look at this and say is, okay, hey, what happened on this day? I see a spike here so the blue is inpatient claims. Why did I have a spike in inpatient claims on this day? Was it a systemic issue? Is this in line with historical trends, etc.? And they're able to really drill down to understand what's going on, right? So this just allows them to do more proactive monitoring. That basically means that they can, make any adjustments to the policies, pricing, or terms before these trends result in losses in the future, right? And this can be done both from just a KPIs view, but also from a fraud side as well. So we've also built a set of fraud dashboards that now are more targeted, right? And what this allows them to do is to be able to spot fraud trends and be able to act on them in a much more smoother and seamless manner, right? And then in addition, what we also have here, this is just as an example, right? So by having this detailed visibility on costs and trends, this allows them to also now start thinking, okay, if I knew, for example, what my costs were at a sub-county region, at a county region, I now have the power to actually create products that are even tailored to a particular region. Because what we see sometimes is that the pricing tends to be very standard. You're using averages that are maybe at a country level, which could therefore mean that some people who might have very low risk are actually kept out of the market, right? But now by having very granular data, can even tailor products to a particular region. And we're even working with one of our clients who's actually working on this, and we're seeing significant reductions in cost. And at the same time, from a customer experience view, and I think the key thing to also point out here is that this is being done in collaboration with the client. They're actually quite happy because now they're able to actually afford some of the policies which are being offered, right? Yeah, so in a nutshell, these are some of the things that we are seeing from the front line. Many of these are also work in progress. We continue to refine this based on the feedback that we're receiving. But hopefully this also shows some of the ways in which we're also using analytics to allow us to actually both make the onboarding journey easier, to sort of make our products more intuitive, and to make it easier for people to actually access health insurance, and at the same time reduce some of the operational costs that we're seeing, and that actually result in higher premiums. So let me pause here and maybe take questions or hand it back to Karimi.
Thank you so much, Shadrach, for showcasing the work that MTBA is doing and how you are supporting providers with your technology platform. I don't know if there are any questions. We only have time for maybe just one question. If not, I will hand it over to Jackie to briefly talk about the next steps, and then I'll come in, thank our panelists, and then we can close. Thank you so much, even for just staying beyond the time that we had allocated. So we're hoping to finalize this in the next 5 minutes. So in case there's no question, maybe Jackie, you can give the next steps and then we'll close.
All right. Thank you, Karimi, and thank you to our 3 panelists. This was really good. I hope the rest of the cohort actually and the participants found this useful and insightful in seeing how some of the principles that we've learned throughout the 3 webinars so far, the 2 webinars, can be applied to your real challenge. So as next steps, I'll be quick because we're out of time. But for our next office hour, since this was not the normal learning webinar, so we will still meet for our office hour, but this time round we will want to hear from you. Just for us, we are kind of taking stock and trying to see what have you learned, what are some of your lessons, how are you already maybe applying this in your workplace, and maybe what are your plans going forward, how are you going to take some of the lessons that you're learning, including maybe some of the lessons from here, to solve the challenges that you are experiencing. So what we will want to see from you is maybe everyone, and we'll communicate this on email. Karimi will communicate as a follow-up after this webinar. It's just like a 1-pager or a 1-slide update on your progress so far, what you've learned and what you think you will be taking forward. And then the capstone is of course coming up, since we are going to do our last webinar in November. So we will also provide you with a structure on that, on how you can structure your capstone, but that will basically follow what you've already been doing in terms of your assignments. So if you've not been working on your assignment, you still have time, and you can do that, and you can share with us, and we can upload on the drive. But we'll share with you a structure that you can follow to put together your capstone project, including of course like an implementation roadmap aside from what you've been doing already on your assignment. And then our next webinar is going to be on November 26th, same time. And we will be focusing this time around on testing and iterating for impact, and how you can test maybe low fidelity products or interventions that fit your problem. So yeah, we hope you will join the next office hour as well as our last webinar. So yeah, thank you, Karimi, and thank you everyone for joining today.
Thank you so much, Jackie. Thank you, Rehab, Libe, and Shadrach. It's really been an insightful webinar, lots of key takeaways. And I hope that the cohort is able to leverage the insights that you've all shared to apply them in how they will, do their capstones, or how they will better design their products in the future. In case you have any pending questions, you can feel free to email me or Jackie, and we'll forward them to the panelists. We'll also share the contacts in case you are interested. We'll share the presentations and the recordings. Other than that, thank you so much for taking the time to join this webinar. We'll see you again in the next month. Bye, everyone.
Thank you so much.
Thanks
Bye.
so much. Bye.
Bye.
Thanks. Bye.
Thank you. Bye.